So what do you guys do in a situation like this where you love the setup, but it's a stock that sucks, probably doesn't deserve the benefit of the doubt? So I'll tell you what I did. I'd love to hear your opinion. I put on like a half to two-thirds of a position.
So this is an awesome question. We've been doing a ton of work on this lately. We're trying to look at the earnings trends for these companies, right? Because in bull markets, at least, if the path of least resistance is higher for some of these names, the reactions to events like earnings reports tend to occur in the direction of the underlying trend. So something like Zoom, you say this is still kind of sideways. What is the underlying trend? If you just look at last quarter, nothing really changed from an earnings perspective. I guess it was a pretty solid beat, but I mean, revenue, not much. It wasn't. It was a pretty standard beat. And look at what they did to the stock following it, up 13%. It kept kind of running from there. So there's, I think, a big shift in sentiment in a lot of these speculative growth stocks where they're actually being rewarded for reports that weren't very different from the reports that they were being punished for not long ago. Peloton's another example of one that just absolutely crushed earnings back in August. And then you saw another beat and rip here late October. So these ARKI stocks are starting to see some really positive reactions. So I would feel a lot better holding a company like Zoom through earnings right now than I would last year or the year before.